The US equities market is one of the largest in the world, representing 40% of the global equities capitalisation. It's no surprise, actually, because in the US there's a real culture of share ownership, with over 50% of households owning shares, hence the enormous opportunity. As these investors, both professional and retail, look for new opportunities and places to invest, they're going to look more and more overseas. And actually, if you look at the statistics, at the moment, $11.9 trillion is invested from the US into overseas companies, and that's compared to $7.1 trillion back in 2016. So there's a huge opportunity here. I'm joined today by my colleague Neil Shah, who's written a paper about this opportunity. He's known internally and externally as very much our sage of Holborn. Hi, Neil. And we're going to talk to him a little bit more about why this is an opportunity for international businesses and how they can take advantage of it.
Thanks, Sally.
So, Neil, how much of an appetite in the US is there for overseas money?
Well, let's go back to the stat that you referenced, which was that there's 11.9 trillion. That's actually a 2021 stat from US Treasury. It's up 67% from 2016. It's up 12.5% from 2020. And that trend is something that we think is going to continue growing. So Treasury data is backward looking. If you look at 2022, you've got a very different environment where you've got the issues of rising rates and rising inflation, and the US investors looking to diversify away from growth into other opportunities. And I think we're going to see an acceleration into international equities as part of that diversification.
Why are you investors so hungry for non-US opportunities then?
Well, I think everyone is asking how they can invest in light of rising rates and rising inflation. One of the attractions of, I guess, non-US equities is that they don't have the same elevated valuations, and so there's less risk taking. I know that there's a number of US investors who've been banking gains that they've made from those growth stocks who are looking at international opportunities and feel comfortable actually investing in European sort of growth names, but with the tenets of value principles. And we recently did a really good interview with Randy Barron from Pinnacle as an example of this, who says that 45% of his portfolios invested in UK stocks, and he's finding that he's got all the tenets of a value investor whilst seeking growth.
Interesting though, with the market at the moment being quite bearish, why is it a good time specifically now? You might think that people might be more cautious.
Yeah, I mean, look, I think there's a feeling that the portfolios are rotating. So having had the same winning strategy over the last 4 or 5 years, it's a very different environment right now, and people are actively looking at where they should be invested. So you need to take time to get your story heard by the US investor. And of course, people don't invest on the first meeting. There's usually a 6, 9, 12 month sort of build up to that. But I think there's genuine interest right now, and I think that particularly where they feel that the valuations are interesting, or there might be some really interesting opportunities, and market dislocations create opportunities for winning companies. So there might be a great story out there. So people are open-minded to that.
Can you help us understand this trend for something called dark capital, which I'm reading a lot about at the moment? Yes,
I mean, it's a term that we've coined here. I mean, I've been looking at financial markets for over 25 years. And my sense is that there's been a structural change certainly over the last 5 years, probably over the last decade. And dark capital is, I guess, summarizing this idea that the gap between actually the available capital and that capital which issuers can access is growing wider and wider and wider. Now, there's a whole range of reasons for it. The fact that regulators have pushed rules that make passive investing much more attractive. So, your pension fund is going into low-cost funds. Those are naturally going into the sort of larger cap stocks because that's where the indexation is. The dislocation as a result of MiFID II and the change in the sort of sell-side environment, growing pools of capital outside of institutional sources. So, the growth of family offices, the growth of retail. And access to that is no longer through your traditional channels of going down the sell side. My key thing about dark capital is that there's a very different landscape out there, and you need a different strategy of approaching that capital.
Yeah.
That capital's there and it's available. You just need to find a different way of accessing it. And I think it's really, really important that you do, because structurally there's a genuine problem right now, which is that we're seeing relatively low levels of liquidity and actually quite a thin market. So you see this volatility. If you want to be the company which, you know, weathers a storm and your share price isn't affected as badly, you need to broaden out and diversify your shareholder base using these different sources of capital. And I think that you'll fare better than your peer group if you go about doing that.
So if I'm a business that's based, say, in Europe or potentially Asia, why is the US an attractive market for me to, you know, why would I want US investors?
So, I mean, the US is, firstly, it's just, you know, the largest source of capital, but also you've got some incredibly knowledgeable investors.
Yeah.
So these are guys who, when you take businesses around to meet with them, you know, that often their understanding of those businesses is significantly higher than if you're meeting a non-US investor for the first time. And that's because they've had exposure to the domestic companies in SaaS or in cloud or whatever sector they're in. They're also true capitalists. I mean, you know, and they really focus on, you know, how you're allocating capital. They ask the hard questions. And I think what you're going to find in the US has been very, very good at supporting growth companies,
Yeah.
and providing scale-up capital. And so if you have any ambition, and when you're running a company, to become, you know, a larger company, this is a key pool of investors, not just because they'll provide the capital, but I also think that they'll get you to think about your business and ask the challenging questions, which will get you to think about, you know, how to move forward in the right way.
So if I'm a European or Asian company, what are my barriers for accessing a US investor base?
Okay, so I mean, the US market is vast and complicated, and accessing the right sources of capital, i.e. the investors that match your profile and is going to support your growth, I think requires the right advisor mix. So it's really important that you're working with someone who can take you to the relevant pool of capital. The other thing about the US market is that you know, actually targeting is much harder. So the disclosure around, you know, ownership stakes, etc., is a little bit more opaque because of the sizes they operate in. And so working with someone who's got smart targeting and ability to identify the right pools of investors is also going to be key. So those two things are the starting point, which is work with someone who doesn't necessarily take you to just tier one locations, but will open up the market for you, and also has got the ability to actually target that market using some smart intelligence, smart targeting. The second part of it is actually helping you narrate and sort of make an introduction to your company to those US investors. So here, you know, what I would typically advise people to do is that before you go out to the US market, make sure, you know, you're filming one of the Edison TV executive interviews so that people have time to hear the management team talk about the story. If you're covered by us on the research side, you know, we would typically suggest a longer shelf piece that illustrates the nature of the business and educates people about it. And also, you know, when within your deck, try and bring an analogy to US businesses. I always remember Greg's going over to the US market, people not necessarily understanding what a sausage roll was, but actually making them comparable to some US businesses.
Yeah.
People suddenly started to get it. So there's some simple things in terms of just advice that we'd sort of give people, but it's really important that you can make a really good success of it if you're targeting the right investors.
Yeah, and getting the right support, I suppose.
Yeah.
Are there any specific tips that you would say that will help these businesses overcome those challenges, apart from the ones that you've just said?
Yes, I mean, I'd reiterate that
Yeah.
advisor choice is important. Preparation is really important. So this is a campaign that you ought to be planning with a sort of 9 to 12 month timeline ahead of actually going out there, because there's a lot of work to be done in terms of preparing the right kind of groundwork of the materials, of the advisor network, of making sure that, you know, your targeting is being done before you actually get out there on the ground. So I think it's something that you should take into account, that it's not going to be just at a, you know, click of a button or a flick or a switch. You've got to plan for it.
Yeah.
The other thing I would say is that there's this idea of over the last year there's been a lot of ability to access the US just remotely, but I still think it's really important that over time you get yourself out there, you meet face to face. I think people are now warming up to the fact that they do want to meet management teams in person is really important. The final thing I would say is that there has been this growth in terms of the importance of sustainability and ESG when you're meeting the investors out there.
Because the perception, I suppose, is that that's not the case.
Yeah, I mean, the US corporates tend to be laggards compared to European corporates from an ESG positioning perspective, but it's increasingly important, and we've had feedback from investors and really started accelerating that they would go and meet people they've been meeting regularly, and all of a sudden, at the very front of the agenda were questions around sustainability strategy. And I think as a European company or an Asian company, it's something that you need to think about, because you need to have those answers because it's going to come up.
Thanks, Neil. It's been an absolute pleasure. So in terms of next steps, if you do want to get in touch, please do that. And obviously you can download and read Neil's report. It's available now. Thank you.